Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrading.com. Welcome to our show. We are Earnings Call. We do this show each and every Monday. And if you're not familiar with what we do, we talk about stock earnings. And we don't talk about the usual stuff of whether or not they meet analysts' expectations. What we talk about is how to make money from companies that are declaring earnings each and every week right here. So you're familiar with our show. What you do know is that we talk about a lot of stocks. So we are going to have a little guide at the bottom so that you can flip through the stocks and see the ones you want to hear about. But we just touch on them, and this is a big week here. So the week of Monday, November 3rd, 2025, which is this week, we have by far the largest number of stocks declaring earnings. We have over 1,500 companies declaring earnings. Now, most of these are small cap and mid cap stocks, but there still are a few big time names out there, including Palantir, Pinterest, Uber, McDonald's, Humana, Pfizer. All right, so there are some large caps in there. Most of them, though, are mid to small caps, but we're going to go through the best opportunities that we have for this week. So sit back, relax, and let's get started. All right. So we have, here is our list for this week. Now, this is not necessarily an all-encompassing list. This is the best opportunities of the most volatile potential stocks and the most quiet stocks. The most volatile are on the left-hand side of the sheet, and what we call quiet are on the right. And how we determine those is really by double-digit or single-digit moves. So those on the left that are breakout stocks, we anticipate double-digit moves for these stocks. And again, it's not us. It's their average historical move combined with what market makers are pricing in for the current move for the stock ahead of earnings or through earnings. All right. And then on the right-hand side of the sheet, we call these quiet stocks. Okay. These are going to be companies that move single digits. And believe it or not, some of these big names just don't move much at all. So let me give you an example. We're going to start on the quiet side. Let me give you an example of one that actually has earnings this week. This is Pfizer, okay? And we'll talk about them more in just a moment, but this is just a quick snapshot of their historical earnings. And look at the stock price. It has just oscillated in a very quiet range. It doesn't move very much at all. And I have the earnings events highlighted with the ellipse. And you can see here through that earnings announcement, the stock just doesn't move very much. That's an example of a quiet stock. And we're going to talk about that in just a second. So let's get to our list. All right. We're going to start with who declares today. All right. So Diamondback Energy is going to start us off. And you can see we have Clorox. There's Pfizer right there. They declare on Tuesday. Uber, McDonald's, Humana. So let's go to the charts and talk about some of these. And we're going to talk about, again, the ones that really have the best opportunity of each category, not necessarily all the familiar names. And I'll give you specifics on that here as we go through our list. So beginning today, we have Diamondback Energy. This is FANG. All right, they will declare this afternoon after market close. That is Monday, November 3rd. The average move here is just 4%. Now, for a stock here that's priced at $142, this is ideal. I love stocks that are in the $100 to $200 to $300 range. Really, anything above 50 and below 500 work the best. What we do is sell premium on these. Implied volatility on options gets really elevated right ahead of earnings, okay, and then collapses right after the earnings announcement. So we like to sell premium, but we don't do it naked. How we do this is through mostly a strategy called an Iron Condor. We might use condors or butterflies, but there's a reason I really like Iron Condors through this. And although it sounds like a complicated strategy, it's not. It's simply a bear call spread that we sell to open and a bull put spread that we sell to open. All right, that's it. You just combine those two strategies together and that is an Iron Condor. All right. Now, next on our list here is going to be Clorox. They will also declare aftermarket close today, November 3rd. The average move here is just 5%. Now, you see the stock is dropping pretty hard here. What we don't mind here is that I'm not worried about that overall trend. I'm just worried about the earnings announcement and essentially the move right after that. Now, the trouble with FANG and Clorox is they don't have weekly options, and they are using, so the nearest term is November expiration, which is still a couple of weeks away. So Clorox, I'd probably stay away from. However, Diamondback Energy, look at the channel that this is in, okay? Just oscillating around in the channel. This is perfect for an Iron Condor, even though earnings are today and then a couple of weeks out. These options expire. Of these two, this probably gives you the best opportunity there. So let's go over to our example that we talk about all the time, which is Pfizer. Now you can see here, look at this, the stock. You might think, oh my gosh, it's really volatile. But you look over here at the pricing on the right, and it's in 50-cent increments. So let me grab that and put it down to $5 or maybe even $2.50. How about that? And you can see how quiet this is. This stock just does not move. Even though it had a little pop right here, that was all news driven. But they will declare earnings on Tuesday, okay? Not Monday. Let me move that over. Tuesday, before market open. That would be November 4th, before market open. The average move here is just 3%. So while this is a $25 stock and usually not one that I like to focus on, the opportunity, since the average move is just 3%, sometimes we do find good opportunities here on Pfizer, and that is why it's on our list. All right. Now, another fabulous name here that everyone is familiar with is Uber. Uber is going to announce earnings results tomorrow, Tuesday, November 4th, before market open. Now, here, the average move on Uber is 8%. Now, it used to be really volatile, but it has quieted down. It's now average move is in the single digits. Market makers are pricing in that type of move right now. So this is almost a $100 stock. So it gives us plenty of opportunities for strikes above and below where the stock is trading for us to essentially give that Iron Condor a range and opportunity to profit. But still, it is 8%, and you need to be aware of that. I want my break evens above 10% away from the money. Okay, so at least $9 higher and $9 lower away from where it is right now. And the premium does start to fade when you get that far away. But for these more expensive stocks, when you get up into the near triple digits, you do find some good opportunities. And you can see the last earnings event here back in August. Look at this. The stock just did not really even move through earnings. No big movements. The big gap that you see was not an earnings event. So I'm not even worried about that. I'm worried about how the stock reacts through the earnings announcement. All right. Now, on Wednesday, let's move on to Wednesday. We start getting into some big names here with McDonald's. McDonald's has shown a little bit of volatility. You can see the big swings here in price going up. My chart's in $5 increments here. So you can see this stock can move $5 pretty quickly. But through earnings, believe it or not, it's just 3% is the average. 3%. And you can see the last earnings event here. The stock popped up and closed just slightly higher, just about 2.5% or to 3% higher on that last earnings event. So not much movement at all. Again, I'm not worried about the stock dropping from 310 to 295, $15 in a week. All right. I'm focused on just going through the earnings event and capturing that drop in implied volatility, not in price necessarily, but implied volatility, because these options are expensive right now going into the earnings announcement. And we want to capture that by selling premium going into that announcement. All right. So outside of McDonald's, we also have Humana. All right. Humana will declare on Wednesday, November 5th, before market open. This one, 7% move, but this is a $280 stock, roughly. Lots of options. We can definitely go away and out of the money, above and below the current price to sell our options. And with an Iron Condor, as you know, we're not selling naked. Okay. It is a spread on the higher side and the lower side, and done at a credit. And we are capturing that credit and looking for that drop in implied volatility. So here, while Humana does move a little bit, okay, it only moves about 7% on average. And that's what right now market makers are pricing in for that as well. So Humana is also a nice opportunity as we go into the week. So we'll be watching Humana as well. Okay, moving on through our quiet list. All right, later in the week on Thursday, November 6th, before market open, we have ConocoPhillips. These energy conglomerates, as you saw, we had like Exxon last week. Stock didn't move very much. ConocoPhillips, their average move is about 4%. Okay, so this is a $88 stock. It's still very, very doable for a selling premium with an Iron Condor strategy. And all we're looking for is that move right through earnings and capturing that drop in implied volatility. Now, a company you may not be familiar with, DataDog. All right. They also declare on Thursday, November 6th, before market open. Okay, for DataDog. Now, the average move here is 7%, but this is, again, $162 stock, plenty of options above and beyond, below the current price of the stock. So we expect that same move. You can see the last earnings event. Yes, the stock gapped up on the open, but look at this. It closed lower and actually closed down like 30 basis points for the day after market close on that day of earnings. And even the next day, it showed a little volatility. So more time decay, more drop in implied volatility, stock's not really moving. And that's what we look for with these opportunities. All right. And as we close out the week, all right, we have Duke Energy. They will declare on Friday, okay, Friday, November 7th, before market open. The average move here for Duke Energy is just 3%. And again, we have another triple digit stock that just moves pretty quiet. You can see the last earnings announcement did the same thing. Gap higher, moved down, and closed slightly lower, just barely less than 1% lower on the day on that last earnings announcement. So very quiet stock. So I'm checking the best opportunities of these quiet names, and that's what makes our list. Yes, there's others out there that are expected to move single digits, but these are the best in relation to how we structure our strategy. And we do this through a publication called Delta Neutral Income. And our goal there is to just generate that nice income each and every month through repetition, just doing the same or similar strategies that take advantage of time decay and or implied volatility adjustments on our trades. All right. Okay, so that's our list for the quiet stocks. Let's get over to the breakout stocks. These are the ones that everybody loves to watch. All right. So the breakout stocks are going to be really volatile. Let's bring up our example of what a breakout stock looks like. This is going to be Akamai. Now, guess what? Akamai is going to declare later this week on Thursday, and this stock historically is a big mover. All right. It usually gives us a lot of opportunity. But interestingly enough, if we bring up our list, you'll notice that Akamai is not on our list this week. And the reason is because, yes, it still has an average move of 12%. Okay. But it didn't make the cut. Okay. It's not necessarily the best opportunity. I priced out Akamai straddles. We do this through a series of strategies called straddles or strangles. Yes, we are buying implied volatility. Yes, that implied volatility is elevated, but we're expecting big moves for these stocks. All right. So let's go through our list and you'll begin to discover how this kind of works. All right. So we're going to start here with Palantir. All right. Now, they are going to declare later today, Monday, November 3rd, after market close. The average move here for Palantir is 19%. The average move. Now, right now, this is a pretty expensive trade. It's $200. Larger trading accounts could handle a straddle or a strangle on this, but you're looking at $2,000 to $3,000 to $4,000 for the straddle or strangle on this. And I don't like those when they get that expensive, but they do pay off sometimes. You can see here on the last earnings announcement, okay, back here in August, look at this gap up. It went from essentially a high of 160, and the next day it closed off of its highs, but closed at 173. Okay, a $13 move on a stock. That's again a double-digit move on a stock just overnight. All right, so Palantir, very interesting. They're already keyed into the AI outlook for Palantir, and anytime those two letters, A and I, are combined together and they get talked about in the outlook, all eyes are on the earnings call that follows the earnings announcement when the CEO gets up and talks about their forward-looking guidance. All right, so keep an eye on Palantir tonight. They're expecting a big move, but we don't know whether it's up or down. All right, so that's why we do either a straddle, where we buy a call and a put at the same strike price, or a strangle, where we buy a call at one strike price and a put at a different strike price. We do this through a strategy called Delta Neutral Breakout for our subscribers. All right, and we are looking for the big moves. Now, another big mover is Hims and Hers Health. Okay, Hims and Hers Health. The symbol is HIMS, HIMS. All right. They will have earnings later today, Monday, November 3rd, after market close. And the average move here has been 17%. And right now, market makers are pricing in that same move. Now, last time the stock, I believe that's about a 12% move right here, drop. It did have a little follow through, which we like, and then it trickled on down for the next couple of weeks. But we're looking for a big move with Hims and Hers, even though it's outside of the AI conversation. All right. Unless the CEO surprises us in the earnings call. But let's talk about another one where AI could come into play, and that's Supermicro Computer, SMCI. Now, they will declare Tuesday, tomorrow, November 4th, after market close. The average move here is 17%. All right. Now, what I like about this is this little wedge that the stock is beginning to trade in. Okay. This is usually something that I look for, is this consolidation. You can see here this little wedge that is forming going into the earnings announcement, and we expect it to maybe pop out of there. Why do we expect that? Well, we just look at the average historical move. Look here back in August. Look at this gap down. Stock was trading at $57 approximately and opened up the next day at $47. A $10 move on a $57 stock, that's a 20% move. Okay. And that's what we look for. And right now, I can tell you we're looking at an opportunity there, and I'll show that to you here in just a little while. All right, let's go over to Pinterest, another common name here. Pinterest is going to declare tomorrow, Tuesday, November 4th, after market close. And the average move here and the expected move are lining up. They're around 16% right now. But again, notice how the stock is beginning to showed a little volatility, but it's getting a little quiet and consolidating as it comes into the earnings announcement. So we expect maybe a big move there. And you can see the last earnings announcement, stock was trading up here, closed around $39, opened the next day at 33. Okay. So from 39 to 33, Big move for a $30 stock. Again, about 20%. Then it rallied throughout the day, got as high there as $36, but then settled at 35.13 on the day. So you can see the volatility that follows on some of these stocks. All right. Now, another historically volatile stock that actually dropped off our list for a little while, but is back on it, is Shopify. All right. Shopify is historically a mover, and this stock will declare on Tuesday, November 4th, actually before market open on Shopify. The average move here is 15%. Now you can see here, believe it or not, I don't have it marked. Let me go ahead and mark that. This is the earnings event. Last time stock opened up or closed the previous day on the earnings day at 127. The next day, the stock opens up at 145. So from 127 to 145, and then closes the day at 154. So it goes from 127 to 154 in one day. Okay. That's a mover. And that's why we trade these Straddles and Strangles, which have unlimited reward, either up or down. Well, down to zero. Okay. On the downside, but upside, unlimited reward to the upside. And when these stocks get going, they can get going. All right. So Shopify, on par here, coming in. Pricing right now is a little expensive for it. You're going to be looking at around $2,300 to $3,000 for the Straddle or Strangle on Shopify, because it's a $170 stock. But again, looking for that big payoff on a big potential move for this particular stock. And you can see back here, look at this. Its average move was 21% back in May, but this move definitely didn't meet the bill. So that happens every now and then. All right. So let's close out here on for Wednesday with DigitalOcean. Now, I do like the consolidation coming into earnings. They will declare Wednesday, November 5th, before market open. The average move here is 18% for DigitalOcean. And I thought a lot of these were declaring after market close. Let me just double check on this one. I wanted to check. Yep, before market open. All right, we got it confirmed. So I did it. Definitely got it in there. So we're looking at an 18% move for this stock, and you can see here back in August. Look at that pop it got from $26.99. Closed the next day at $34. That's a big mover. All right. So Straddles and Strangles on a $40 stock are a lot more affordable than they are on a $200 stock. I can tell you that. So we'll definitely be wanting to be watching DigitalOcean as we head into earnings. Okay. Another volatile stock. All right. Here we go. Dutch Brothers. Believe it or not, Dutch Brothers declares Wednesday, after market close, Wednesday, November 5th, after market close. The average move here is 28%. Okay. So sometimes it might move 12, other times it might move 36. Okay. But it is moving double digits through its earnings announcements. And that is a big mover for this stock. You can see here, this is the last earnings announcement right back here. Okay. And you can see big gap up right after the announcement, and we're consolidating a little bit, as you can see here, right, going into the earnings. So they're getting geared up, and implied volatility is getting pumped up on these. All right. Now, another one that is a historic winner for us is ELF. Okay. ELF Beauty. Eyes, lips, and face is what ELF stands for. Eyes, lips, and face. ELF Beauty will declare on Wednesday, November 5th, after market close, and the average move here is 22%. So this is a historical volatile stock, definitely one that we've traded quite a bit, and it did get a little pricey for earnings announcements, but it's coming down in price, and $120, getting there, getting a little closer to an affordable number. Okay, but you're still going to be paying between $1,000 and $2,000 for a Straddle or Strangle. So definitely larger accounts for ELF Beauty. which will declare on Wednesday. Okay, continuing to move on. Here we have the trade desk. Now, the trade desk, boy, this is definitely one to watch. They will declare on Thursday, actually November 7th. Sorry. Let me just confirm that. I don't want to give you wrong information there. The 6th, sorry. Thursday the 6th, after market close. Okay, got that corrected. Here's the most important part. The average move on this thing is 30%. All right, and you're thinking, no way, this stock, I'm not familiar with them. Here's the last earnings announcement. The stock goes from $88 to $53 in one day. Okay, what about the previous? You can see the stock just doesn't move unless it's earnings. Look at this, May 8th. Okay, the stock goes from 58 and closes the next day at 70 and closes the next day after that at 79, almost $80. It went from 59, okay, just right at 60 to 80 in 3 days. Okay, $20 move. This stock is a mover. Look at here, the previous earnings announcement way back here. Okay, stock closing at 122, closes the next day at $81. All right, $81. Shareholders do not like that when they get those big gapping moves. All right, so let's get back up to this week. All right, so we're going to declare on the trade desk on Thursday. Again, we're expecting a move of 30%. Now, the problem is you think, oh, man, this is an automatic winner. Market makers are not, let's just say they're they're some of the smartest guys in the room. All right. So they're going to price this accordingly. And what we're looking for is an edge. Like if I could find a trade where options are maybe mispriced, yes. Even today, options do get mispriced. Okay. Everybody says, oh, market's too efficient. There's no more mispricing. Yes, humans are involved. So there is mispricing. All right. And that's what we look for on these. And if we can get it for expecting a 15% move when the stock averages a 30% move, that's a potential moneymaker right there. All right. So that's kind of what we're looking for. And we'll just keep an eye on it. Okay. Sometimes we have to wait a little while for that pricing to adjust and get right into our window. Now, a stock that you may not be familiar with is Innodata. Innodata will have their earnings announcement on Thursday, November 6th, after market close. And the average move here is 26%. Now, this is a $70 stock, so we're getting into the affordable range for a straddle or strangle here. But this stock moves. You can see the little pop here. It doesn't look like a lot, but remember, the stock back here was trading at $48 and closed the next day at $55. Okay, so on a $48 stock, that type of move is a pretty big move. And we're looking for that again here, even though the stock is now $70. And it's one to watch because look at all of a sudden, look at the different candle sizes here recently compared to previously. Okay, right around September, things got a little bit more volatile for this company. And you know what? That earnings call after the earnings announcement, okay, the CEO coming up, taking Q&A, giving a statement, outlining future guidance, taking questions from the analysts. That is where these stocks will start to really move. All right. And we're going to close out the week with SMR, which is NuScale Power. All right. NuScale will declare earnings on Thursday, November 6th, after market close. The average move here is 18%. Now, the stock, as you can see, is consolidating, but through earnings, okay, we do get these little pops and then trends. And I do like that when we do get that type of movement. All right. So they will declare on actually NuScale, my chart. I messed up my chart there. So let me correct it. I'll give you, okay. So Thursday, November 6th. That is correct. Let me move my line to the 6th. I don't know why it jumped out there to where it did. Okay. We'll put it right there. There we go. and the average move, I just priced all these out right ahead of our show is moving right now. The expected move is 18%. Okay. All right. So let's pop up our list one last time here so you can take a look at it. Again, there's stocks like I talked about. Akamai will have earnings this week. AppLovin has earnings this week. Warner Brothers has earnings this week. Airbnb has earnings this week. Why didn't we talk about those? Because those are not necessarily the best opportunities. What I do each and every week is post at the time of doing the research, which is Sunday nights into Monday mornings, is who has the best opportunities to profit. And right now, the pricing is coming in close for these candidates. Okay. That's why those other stocks did not get mentioned or talked about, is because there are other better opportunities as we go into the week. Okay. And sometimes those opportunities do not work out. Sometimes they fall apart before the earnings announcement. We just skip those trades. Okay. We just try to take the ones that line up right as we come into that earnings date. All right. Now, as you know, each and every week we start talking, we give out trades and we talk about the trade that we did last week and we talk about a new trade this week. But I wanted to alert you of an upcoming event that I want you to take advantage of. Okay. Ewo Trader and Hub are the leaders in AI technology when it comes to trading. Okay, we already have a publication that focuses on AI trading, and we're going to introduce you to our newest launch of a predictive AI trading methodology, which involves Elliott wave analysis. Okay, and this thing has been doing really well. The event will be on Tuesday, November 11th at 8 p.m. Eastern. Okay, 8 p.m. Eastern time, and we have a link up on the screen for you to register. It's a free event. Register, take a look, and listen to the content that's going to be delivered that night between my colleagues, John Paul and Stephen Camp. John Paul Drysdale and Stephen Camp will be hosting that, and you will definitely raise your eyebrows when you see how that this new AI technology that they have been trading live now for months and months and months with spectacular results. So be sure and join us live for that event on Tuesday, November 11th at 8 p.m. Eastern. And you can register through that link that you see here, and that we'll put it in below the video when we get this up and posted. Okay, so let's move on then to our trade of the week. Okay, actually, let's talk about last week's trade. We'll talk about that last week's trade. Last week, we had Wayfair, and we did what we call an Iron Condor on Wayfair. We looked at its average move, its expected move, and this was a great opportunity. As you can see here, the light blue lines are break evens. You can see they're well above and well below the stock price. We've centered the Iron Condor, which is in on the right. This is the modeling. This is what an Iron Condor looks like. It's a little box around the stock. Okay, and results came out, and the results were definitely made the stock move a little bit, but it was what the CEO said in the guidance. And you sprinkle in those words, those magic letters, AI, and you combine them together, and we have a problem. So let's look at the results. The stock did move a little bit more than we wanted it to. We had to close this out at a loss. We took it, after the earnings event, we waited a day, saw a red candle, stock traded lower, waited one more day, stock came down a little bit more, and we closed it out for a loss. But I want you to notice here what the loss was. It was just $166. $166, okay, over a 3-day period. All right, did not do much damage, but I showed you the return percentage this time based upon the hypothetical portfolio that we trade these on. All right, this is based upon a $10,000 trading account. That's it. So effectively, a $166 loss equates to a 1.66% loss on portfolio. the reason I bring this up is because that's actually very easily overcome. Very easily overcome with the type of trades that we do here. In fact, one winner with another Iron Condor could overcome that. Or a winner with one of our breakout trades could easily overcome that, okay, in just one trade. So let's take a look at what we have up on the list for this week. Okay, on deck for this week, we are going to look at Super Microcomputer, SMCI, and what the reasons are what I showed you earlier. The stock is trading up into a wedge. Pricing was right. Okay, the risk for a strangle. Now this is a strangle. All right, it looks like a straddle, but I'm using different strike prices that are actually only $1 apart. Okay, so here we might be using like a $43 strike call and a $42 strike put. Okay, so that would be a strangle, and you can see how the black line, there's a little flat space right there on that black line on the option modeling example. All right, but this stock, we're looking for a breakout, either up or down, and it's all based on those magic words AI. Okay, where we could get that move, and you can see the last time, the volatility, we definitely had a great trade the last time we did this on Super Microcomputer. So the debit here is going to be a little over $500 for the strangle. All right. And so very affordable even for smaller accounts. So definitely appropriate for an account as small as $10,000. Anything below that, it's probably a little risky just because of the amount of capital it would take on a smaller account. But $10,000 and up, easily done, and definitely appropriate for those size of accounts. So a strangle on Super Microcomputer. And if you join us next week, we will see how we do. Each and every week, we take a look at our winners and our occasional losers right here on the show, and we talk about them each and every week. So be sure to join us here live each and every week when we go through our earnings call, and join us next week for our earnings AI event, not earnings related. It's actually Elliott Wave related, our AI event. The link you see posted here. So everyone have a great trading week. Lots of earnings coming out this week, more than we could talk about, but a lot of fun. We'll recap some of them next week and also have a new list for you and a new trade opportunity as we do each and every week. So everyone have a great trading week, and I will talk to you again soon. Bye-bye.